Now, how would you really see that? Well, you would drill out a little further, right? And look at that and go, well, that's not as bad as it felt today. Okay, everybody, I hope you had a great trading day. Today was a little wonky. We're going to discuss what happened. We're going to really focus on what to do next week. And there's a lot of issues next week, and we're going to address all those issues and how we're going to handle them. So let's just deal with a couple key issues. Yes, Tesla ran up, and yes, Tesla pulled back down. This is not the end of the world for Tesla. This does not mean that all of a sudden Tesla is going to come all the way back down. Let's take a look at this and drill into it. And as Tesla, in my opinion right now, is kind of as the market's going. So let's just focus on this. We broke out. Look at this RSI. I'm going to link this RSI video. If you have not watched it, I'd strongly recommend that you watch it. Because as you go through different time frames and you understand this, you can save yourself a lot of heartache and a lot of money. But what's really important about this to me in looking at this situation is, yes, you popped over 825, but you really only came back down to 817 at the end of the day. So we cleared this level. Yes, you were a little higher today, 841, but you really didn't come all the way back down. So what is that telling you? Right? That's telling you that you are holding these gains. And now how would you really see that? Well, you would drill out a little further, right? And look at that and go, well, that's not as bad as it felt today. It felt bad because probably people bought out of the money options. I mean, I traded some today. And, you know, I have an option position on this right now. And I'm looking at this and going, well, I held support. See, it's very important that you use multiple time frames and that you drill into these and you look exactly at where these support levels are and you see, well, what's going on? All of this matters. It's just not there. You have to kind of understand it, right? So you go, okay, well, here's my reversal pattern. Here's my bearish engulfing. We broke here. We can kind of see that that came down, formed a hammer. That didn't really do much. All right, so then I have a doji. It makes a decision, but did it make a decision? Because we never broke support. So we have a doji, broke support, then we have an inside bar, now we have another inside bar. So in other words, I have two hourly inside bars inside Tesla. So we know what that means, right? Inside bars, when you have double inside bars, whatever the next move is via up or down is going to be volatile. To me, the way that this RSI is sitting, is it a coin toss? To me, it's not a coin toss. I'm leaning towards it's going to wind up going back a little higher. It's why I have calls on it right now. But just based upon the fact that we're holding 810, it's not like you held a level where you have a ton of support up here. Not at all. So that's a really good sign for the market. Now let's just look at this on the weekly. Okay? Now, this is where you are on the weekly. When was the last time you had a base like this on Tesla? Okay, it's been months. It's been absolutely months that you've had a base like that and you've broken out of that base and closed at a multi-month high, and we're going to get upset because we didn't close at the all-time high. That's just being greedy and not understanding that the market might be changing. I'm not saying it is changing. I'm saying it might be changing. And we can always see how these wicks, because we know wicks are what? Price rejection. So it's not really crazy that it would just happen to stop here, because we know that support, right, which is what this was, as we know, these little wicks and the points of these wicks are where somebody said, I will buy all that you have. And now that person obviously has changed their mind and wants to sell. So, or persons. But so when you're looking at it from that perspective, this tells you a completely different story. Is this something that you need to be rushing out of right now? I don't know. If you take a look at some of these little indicators that we're going to use, you know, the 50 weeks up there, that's probably something that you're going to have a problem with. Look where you stopped at 21 week. Okay, you have the 10 week, which now has all of a sudden become what? Support. Flips from resistance, where it was here, to support, right? You see the pattern, if I keep saying it over and over again. And now I have a 5-10 week cross right here. That's not something I'm willing to sell into. I'm not really willing to sell into a long green bar and say that this is going to reverse now. I'd rather be late and see what happens. And we certainly have enough that we need to worry about for next week, right? So, I mean, we're aware of the earnings. We're aware of what's going on. Hopefully, we're aware that GDP is going to come out. So this is investing.com. I always use the site, and I'm just going to point this out. Okay, this is going to be next week, and you can see all the data. But starting Wednesday, July 27th, just be aware of this because this is going to be big. You're going to have your FOMC statement, all right, at 2 o'clock. At 2:30, we have the coveted press conference, and we usually know how Powell does on those. So anything over 75 basis points, if they do something like 100 basis points, market will sell off. Okay, just be aware of that. That's my opinion of it. They're not going to go, oh, good, we're raising 100 basis points. They're going to We're not predicting that. That would be bad. But just Thursday's really where you're going to have to watch, because when you have GDP, now people are going to be looking for GDP. They're going to be looking for the core PCE, which is really something that the FOMC focuses on. This is all Thursday, and you can just see how much is coming out on Thursday, right? But these GDP sales numbers, see where this is, you're predicting negative 1.2. When that kicks off there again, that's going to give us negative growth. 2 quarters of negative consecutive growth are what a recession is. Couple that off with next week's earnings. So let's just run through what we're looking for. So Meta is going to come out on the 27th with earnings. Now, we saw what happened earlier with Snap, right? And we saw how this acted. I think it's very, very silly to, by the way, I have a short position on this. I just want to throw out that disclosure. And I have puts on this as well. But you're looking at something like this and going, well, that means Facebook's got to be bad. Okay, it's possible that Snap is just getting their butt kicked by TikTok and Meta doesn't have the same issue. Okay, I would argue that if I was going to be an advertiser and I was going to cut my budget, I'd be cutting my Snapchat budget, not my Instagram budget. Just my opinion. I could be wrong. I've been wrong before. I'll be wrong again. But I don't think this is systemic of what's going on out there. And for Snap to be down 40%, quite frankly, I thought it would go to single digits, and it did, but I think it's going to go down more. It was a really bad quarter. It was actually one of the worst quarters that I ever had. This wasn't when I was really going to go over for it with you, but let me just walk you through this while we're here. There's no way that you're not testing this pandemic low of 820. You could do it next week. This was just an awful quarter, and I just think it's an awfully poorly managed company. And I'm not saying that Meta is going to go up. We don't know that. What I'm saying is, I think it's disingenuous to say Meta is going to have a bad quarter because of Snap. That's where I'm going with it. For Google to lose 6% of their value, I mean, that's just absolutely silly. So if you want my opinion, you could be setting up, and you don't know this. I certainly don't know this when I make this statement, but you could be setting up for the exact opposite, right? Where everyone's super negative on one of these and they come out and they absolutely crush. Okay, that could happen. So keep that in mind. All right, this is not telling us exactly what's going to happen here. This is simply telling us what happened with Snap. So for me to extrapolate that out for Google, it's not something I'm willing to do. Now, the one that I am very interested in, and I have a long position in this. This is something we've been in the newsletter since 119. Just FYI, there's a free version of the newsletter in the description, and I would follow along. It comes out Monday, Wednesday, Friday. It's definitely something that you're going to want to follow along so you can kind of take a look at what's going on there. Now, you'll notice that we're more focused on what's going to happen for next week on this one. And I have a hard time thinking that this is going to have a bad quarter. Again, my goal with this is to get up and in it. My hope, right, and we know hope is not a strategy, my hope is that I get to 129. If I can get up to 129 before this earnings date, then I'm going to be able to just simply buy puts against the position. And then worst case scenario, I'll break even on it, or I can trade around it after hours. But I don't want to go in blind, and I certainly don't want to go in naked unless I'm up at least 10% in the position. If I'm up 10%, it's a different story. I'm not so sure that that's going to happen by then. But you have to look at what's going on out there. You're going to have signs of this ahead of time, okay? Amex had a great quarter. So you could be upset that you bought it up here and then it got crushed. That's fine, but it's still up from where it closed, and it still had a great quarter. Now, before Amex comes out, before Amazon comes out, what do we have? Well, we have a little company called Visa that's going to come out on the 26th, okay? MA is going to come out on the 28th. So which one should you be watching? Right? If we know that this is coming on the same day as MA, we're not going to care about MasterCard, but Visa can give us an indication of what's going to happen with Amazon. It can also give us an indication on what's going to happen with Walmart. Okay, this was another one we bought in the newsletter at 130. We're up $2. Like, right now, this is a very low beta stock, hardly moved today, which is exactly what I want. I love these dojis because dojis are signs of uncertainty, and then based upon how they move, there are definitely ways to take advantage of that. But what I would focus on is I would focus on these kinds of positions, and I would focus on how you can get up and in them before the next earnings cycle. I just think that it's very important to understand that even JP Morgan came out and said in their conference call, and so did Bank of America. Now, these stocks had awful earnings, kitchen sink quarters that were just disasters. JP Morgan said, we're so concerned we're not even buying our own stock back. Okay, the stock's up $8 still since then. What's really pertinent about this is they came out and said they've never seen the consumer stronger during a possible recession. So Bank of America said something very similar. So that's one of the reasons why I'm leaning very heavily into these kinds of consumer discretionary names. Now, what does that mean? That means that that's where my focus is, okay? And yes, I'm right at a resistance point, but you know what? Sometimes the first mouse gets the trap, second mouse gets the cheese. So we don't know how this is going to play out yet, and we're going to go over the indexes, so stay to the end. But what we have to do is just come up with a game plan. So we know that the big dogs are coming out with earnings next week, right? We have Google, we have Meta, right? We know this. We have Amazon. We're going to have to focus on those names, and we're going to have to watch what's going on there. I think that's really important for us to understand that we have those three categories. Now, in regards to Amazon, I want to just focus on a couple key things here. Look at this on the weekly, okay? And let's get rid of all this data. So, in other words, I had a bear flag. We could say this is the flag, right? So the flagpole, right? On this bearish engulfing right here. We could see how it went across. We could see how we held support and bonked on that level 3 times. We can call it 4 if you want to give it a range, right? And then we can see how we flipped that level right here. So I don't really see a major problem here with something like this. I don't see an issue with it. You look at this close and you realize that, wow, that's really interesting, right? Let me just show you this line so you can kind of see what I'm saying. So in other words, this is where we opened one week. This is where we closed another week. So that's a pretty significant line, right? So if next week we can close over that, it's quite possible that we can get to the top of this flagpole fairly quickly. And that's something that we're really going to want to watch and see if we're able to do that, right? We're going to want to watch this one really very closely. And I would focus on support levels. Let me give you an example. It's one that I pointed out in the trading room today. And I'm not saying it from the standpoint of it worked yet, but it's not a coincidence that when you have these kinds of support levels and you mark them, right? And then they just happen to hit. You really need to pay attention to that. You really need to pay attention to these areas, right? It's very important in trading for you to have your support and resistance lines. It's really hard, and I might as well go through the indexes now because this is really one big trade right now, right? It's really hard to look at these and go, well, what am I supposed to do with this? Well, I mean, look, here's your peak now, right? So if we know that this is the peak and the outstanding peak that happened today, you can throw an anchored, I don't want to throw that on there. That's a waste of time. But you can throw an anchored V-WAP on that, right? And I'm not a big fan of these all the time because you can V-WAP all over yourself. People put them everywhere. And then, you put them 100 different places and say, oh, look, it hit. It's silly. But when you have like a little spot that sticks out like this, it's like an anomaly, which this kind of is, isn't it, right? You can see how we had a doji here, and you can see what we did to that doji, formed this flag, broke down, and kept going. But now you have a level to watch. Now you know all the players that are in here have broken, just like you could have gone back here and gone, well, let's create an anchored VWAP, and then you could see what happened from that, right, from that low, right? Or you could just use another peak, and now you're going to see what I'm talking about here when I say that you can just VWAP all over yourself, because you can put these anywhere, right? And you can kind of see where they're going. So I think that's really important to understand that, yeah, there is some validity to these, but just be, you have to use them sparingly to say the least. But I'd be really curious to see if we can get over that level, because right now, and there's a reason I'm pointing out this level, because if you notice, we never closed over it. From when that bar transpired, none of this did, right? Never got near it as it even kept going down. So that tells you what's going on there, and that's definitely something I'd be focused on. But if you look at this on the daily, you have not had anything remotely like this for a very long period of time. You haven't had anything where you're going up like higher lows. This was just a runaway kind of market, but even higher lows, you'd have to go back to like July 2021 where you were running up, coming back down, running up. Doing this is completely an anthem to what we've been doing. I mean, even the greatest run that we had of the year, if you take a look at what the greatest run of the year was, which was here, this was all higher lows, right? If you close and clone this, and I'm going to spend a lot of time on the indexes, just FYI, versus ideas. I think all your ideas should really be focused on a couple key things. I will give you a couple more that you should look at, but smaller names, but I would focus on the big dogs next week. But you see this? Like, this is where you broke out and then you went higher. And that's what I'm saying. Like, you want to look at sometimes these peaks, and sometimes it does help to put like an anchored V-WAP there on these peaks and then go, well, we didn't break that. We kind of rejected it. So maybe we should look at this anchored V-WAP, right? So in other words, what I'm trying to explain this tool to you is, does it have a time and place? Yeah. And what's going to happen if you break that anchored V-WAP? Right? Because this is where all the players are, right? So what's going to happen if you break that? Well, that would be really good. We haven't broken it yet. I thought today might be the day. The VIX had other concerns. And I get it because people are going to play the VIX right now, right? So you kind of stopped. I thought we might sell down a little bit more. That's not really what happened at all, is it? So it kind of got us into a very different spot. If you could do me a favor, I don't do any commercials at all with this. I don't run ads purposely on this. So if you could share this on social media and help support the channel, I would greatly appreciate it. But in regards to this, look, you're breaking down. Let's look at this on the weekly. I would recommend that in your system, that your trading system, which I'm sure everybody has, that you put yourself in a position where here, take a look at this, where you look at these charts on a weekly basis and you see what's going on. So are we going to hold here? We're going to have to see. We're not really sure yet if we are going to hold here or not. So we're going to have to see how that transpires. But if we go through the varying indexes and take a look at the SPY, okay, this is a high. Now I get it, right? People are going to go, well, what about this? Well, you know what? You kind of threw it, aren't you? You still have you had a bear flag here, and you kind of broke out of the bear flag. You broke out of the flag part. You're not above the flagpole yet, which is really where you need to get, right? So we know where we need to get to, but let's get rid of this for a moment. Let's get rid of all these annotations. Let me just show you something else that you might just want to look at, right? So you can kind of go here, click on that, and let's look at an anchored VWAP again, and that's kind of interesting, right? How you've been unable to break above this peak. So maybe when you get above something like that, you want to take a look at it. I'm still leaning long until we don't get above this. So as long as I'm above the 50-day, I'm leaning long. So this easily can stay right here and just hold. And then as it holds, it can just go flat, right? As this all starts working its way up, this is going to start curling up, right? So as long as I'm here, okay, I'm good. Just stay above it and this will start curling up. Let me give you an example. Here's the 21. So the 21's curling up. I get it. We're in a bear market. We're going into the Fed next week. We're going into massive earnings season. And there's a lot going on here. But what I'm getting at is you need to focus on what's actually happening. I have a saying where it's just very simply trade what's in front of you. And if you're looking at certain levels, just watch those levels. I mean, this is glaring to me, right? That we couldn't do it here, rejection, got near it, kind of pulled back, right? But so when you see something like that, that's not unrealistic to want to get above that March high. Maybe you could even see if there's a trend line here that we could look at, if that's something that we should be paying attention to, right? You could kind of make the argument that we're through that trend line, right? Because I'm using that close because it gets me to here, right? So I'm using the open rather, instead of using the top of that bar. Use whatever you're most comfortable with. But if I went to get super technical, I could even make that a really little tighter, couldn't I? Okay. And you can see that you're still on the open right here. And now you're on 1, 2, 3, 4, 5, 6 places. So that's even a tighter, more accurate reading, isn't it? And we can see that we popped out of that. So not only did we pop out of that on the SPY, but we're also above that. So I made a higher high. I'm above the 50. I'm above the 21. We had broad-based rallying in several different sectors this week, right? I mean, we saw this, right? One of the sectors that we bought in the trading room, and one of the sectors that's in the newsletter, and you really should be getting this newsletter, the free version of it, just to follow along. It's pretty significant stuff. I think it is. So, I mean, I write it. So obviously I think it is. I think we're up to like 6,000 people that get it now. So But you see where you're at right here, and how you ran right to that level. So now you have to watch that level, but there were some great trades here, on these names. So this was something that we bought. Now, I'm not out of this. We're still up 10% on it this week, but you can see this curling. People are buying home builders. Why? Well, Lowe's and Home Depot. Just because the home builders might go sideways doesn't mean that the restoration companies will, right? They're providing opportunities. Again, this went what? Up 10 points since we've been in it. Now, whether you took it or you're staying with it, because I'm trying to position build here. Let me say that again. I'm trying to position build here, okay? I don't care if the market does something where we come down here and then go higher, right? I don't care if I'm trying to position build, okay? I care if I'm day trading. If I'm day trading right now, then yeah, I want to sell into the rips. That's not what I think is most prudent here. I think we have an opportunity here where we could base. And if that's the case, I want to be a party to it. But we can see that we have certain levels. I do want to give you just a couple that I am looking at here that I think are worth your time. And I know I spent a little time on this. I showed this one earlier. Again, this is one that's in the newsletter. Look, this pulled right back to support and held. If you go down here and take a look at a 15-minute, okay, here's your bonk level. I mean, this could be in a textbook, right? You can see a little reversal. Here's like a really big hammer, flips. There's your doji, goes. Look how it undercuts right here and then flips over. If you're more of a short-term trader and you're not using RSI, you're at a disadvantage. I'm just going to tell you that. I know a lot of people come out with a lot of different bells and whistles and new indicators. Focus on the Ichimoku cloud I go over and focus on the RSI, and you'll basically crush any other indicators out there, in my opinion. And you can back test them and take a look at that. But you're at a disadvantage if you're not using these. I mean, they're absolutely glaring. And this is definitely something that I think that you should be taking a look at. I think this makes a lot of sense. This was another one from the trading room. This is not my idea, but I want to get this out there because this can continue to go. This has an immense short position in it, TBLT. So this is a free site. All the sites that I put on here, I try to use free ones so that you can see what's going on out there. You can see the short percentage of increase is at 1,547%. That is an insane increase in this name. So knowing that, we know that you might see these people go, what did I just short? You can see how it was 170,000 shares and now it's 2.8 million. When you see things like this and you start seeing today's trading volume and how all of a sudden it's 3,000%, you probably want to pay attention to the name. So you can see clearly here how you're trying to break out of it. What's fun is just go take a look at a weekly on it. You can see where this could go, right? This is just sold completely down. And you look at where this was like April, May. And I'm not saying it's getting back there, but this was a $40 stock back, right? So for this to all of a sudden be down here, and now we know why, right? I mean, it's not glaring. It's pretty obvious, right? You had earnings, and then here you have this write down. So it's pretty glaring as why, right? People are thinking it's going out of business. But to pile in the shorts, maybe they're going to figure something out. Either way, when you start curling like this, that's definitely a sign that you could get to another level. That level could be $20. So that would not shock me at all to see something like that. Now, one of the key things that we just talked about was when to use anchored V-WAPs. Like on these kinds of moves, you use anchored V-WAPs. Now, let me show you something. Why is now the time? Because you have this huge anomaly. No one can argue that this is an anomaly, right? You're just out of nowhere. You ran all the way up. You came all the way back down, right? And all your hopes and dreams smashed. You thought it was good. You're going to make all this money, and then you wham. But now look at where that line would take you. And look at what happened when you flipped that line at 330, and look at how the stock's acting since it flipped that line. So as long as you're above that and this is curling up, I would pay very close attention to this because this does have the potential to go again. So that's it. I wanted to give more of a grand overview on what's going on out there right now. I think it's really important for you to look at the indexes and understand that. One last thing, I know I try to keep these shorter, but one last thing. If the bond market's rallying like that, okay, and you're at 278 right now, the 10 years at 278, where are you getting a return, okay? So in other words, every time that the 10-year contracts, the PE expands. Every time the 10-year contracts, your PE should expand, okay? Because people are going to have to take more, right? They need per unit of risk in order to make a return. CalPERS is down 7%. where you're going to make your money back, CalPERS. You're not going to make it buying 10-year bonds right now, right? You're going to make it in buying equities. So it's not an if, it's a when this turns around. Just understand that. So that's it. Please subscribe to the channel. Click all notifications. I answer all your comments. Top right corner, click to take a look at the trading room and to preview it. Have a great weekend, and I'm looking forward to Monday. It's going to be a great week, everybody.